Okay, so I hear, as a mortgage lender, I hear so often people that want to make a move or they want to access equity in their home, but they are really, really fixated on this amazing interest rate that they secured during the pandemic. I love how people brag to me like, I have a rate of 2.625, and it is one that would be hard to part with, but at what cost is what I would ask you. So this is actually this is a client of mine. What she owes on her house is 475,000. Her interest rate is 3.75, and her total PITI payment, principal, interest, tax, insurance, is 2819. And Jane is her name, that's what we'll call her, wants to make a move. She's ready to transition to a different home. She needs more space. Her family is expanding and she's trying to figure out what to do. So I meet with Jane. We do a consultative pre-approval appointment. And part of that pre-approval appointment is doing an analysis of what Jane qualifies for. And that includes looking at what Jane's liabilities are. Jane has 4 big credit cards. These are her true interest rates on her credit cards and her true minimum payment that Jane's paying monthly on the 4 credit cards. So when we look at her entire household interest percentage, her blended interest rate, which is her mortgage and her credit cards together, what she's holding in totality, she has a $556,000 outstanding amount of credit that she owes or debt that she owes. Her total monthly payments on her mortgage and those 4 credit cards is $48.33 a month. And her blended interest rate total is 7.066%, which just so happens to be a smidge above where mortgage rates are today. So her blended rate is actually higher than where mortgage rates are. And so it is something that we have to consider as we think about maybe transitioning and helping Jane and her family get out from underneath this debt. The average American per CoreLogic has about $274,000 worth of equity, and that's the majority of Americans' wealth. So we need to look at how can we use Jane's equity to help her transition to a new home and be able to consolidate her debt and not extend them even more as a household. So she'd like to lower her monthly payments. She would like to transition into a new home, and she'd like to hold on to her 3.75% interest rate. So I put together a presentation for Jane to show her exactly what this would look like for Jane to be able to transition to a new home.
One thing I'll just point out too, I know that these are just credit cards, but this could easily be swapped out for 2 car loans. Car loans are very high right now. So the $85,000 is not necessarily unrealistic when we look outside of just credit card debt, but home equity lines of credit. I'm working with lots of clients today who are looking to sell, but also have their HELOCs all the way maxed out. So I know that number may sound high to some viewers, but when we look at overall debt and we break it down outside of just credit cards, Americans do have debt. And I think you and I see it intimately because of our job.
Thank you, Lauren. That's a really good point. Jane identified that she wants to be in a different part of Denver. So her move up house isn't too much above what she owns now. So her current home, Lauren could sell her home for $700,000. This is her total payments. So if you look at Jane's current breakdown of her monthly payments, her all-in mortgage payment again is the $2819. Then she's got the $2,014 a month of non-mortgage debt. That's what comprises her current household output of $4833 for her payments. If we look at her new home purchase, so she's looking to get into a home that's a little bit more expensive. The home in the area that she wants to be is approaching $800,000. So what Jane and I put together is selling her current home, paying off the credit card payments that she has, that debt, so she can get out from underneath it, putting down the difference of her equity. And then we did a creative interest rate buy down for her just to get her interest rate down a little bit. And her all-in monthly payment is $4313.91. So she's upgrading to a new home that's slightly more expensive in a better area that's closer to her family. And she's saving about $520 a month in total payments.